I love it, man. We're going to talk all about it. This is Jesse Ray with the Growth House Podcast. You heard it first with Dominic. I'm excited to have you on. I appreciate your time. And what you just said was really incredible. And I know we had a conversation. We sat down, and I felt like we could have sat down for another 2 hours because I had so many questions on how you're able to do this. I personally haven't heard this, method from rent to own. Before we dive into that, Dominic, can we just take a step back? Like, how'd you even get into the mortgage industry, then rent a home? And where's the beginning? Like, you can kind of pick the beginning.
Yeah, absolutely. Right. So I got into lending out of college, right? I started as a junior loan officer after I got out of the Marine Corps. Went to college, got in the Marine Corps to pay for my GI Bill, right? Because my parents couldn't pay for my college, right? So we all have to kind of figure out a way. So that was my venture into getting to school, right? And then basically, I knew that I wanted to be in finance or banking. I just knew, right? In high school, I took economics, and I knew that was for me, right? That just plays to what I enjoy, like the numbers. I enjoy the numbers, and I enjoy the finance aspect of it, right? So I knew that was my calling, and I was fortunate, right? Most people don't figure it out till later what it is that they want to do, right? So I was able to kind of get the opportunity to start, right? It's the old East Valley National Bank that used to be out here in the Valley. That's how I got started. And so just worked my way through that process. Got all the way up to VP level, working for some of the major lenders, rolling out their lending programs and criteria for about 35 states around the country, a lot of the down payment assistance programs, right? So once I got to that policy point, or credit administration as we call it, I could see that there were plenty of people that should be able to qualify, but banks tend to be inside the box thinking. And so I didn't realize what was potentially there. The banks won't do certain things. And so kind of kept that in mind. At the same time, while I was working a corporate job, right, so a W-2 job, I was buying traditional rentals, right? So the old traditional, put 20% down, you put a traditional tenant long-term lease on it, and trying to cash flow. The challenge with that is you cash flow very little in traditional rentals. And so after a year, if you have turnover, you have to go in there and paint the property again, change the carpet, fix it up, right? So it eats into your cash flow. So that has always been a challenge for traditional rentals, but there were some benefits. You get the tax benefits and so forth to offset W-2 wages if you're a W-2 employee. As I was moving up, you run into the corporate politics, as they say, right? So as part of a merger of one company to another where I was at, those are the challenges you encounter in the corporate world. And so I made a decision to just leave it because I didn't want to play the politics at the time. And I got into flipping and wholesaling. Right? So I thought I always wanted to do real estate, right? And doing it on the side while I had my W-2 job. Obviously, you don't have the time to go source your own deals, right? You buy them traditionally on the MLS and so forth, and then you cash flow them and whatnot. I had enough reserves to leave my corporate job, and also I took a chance on myself. I cashed in my 401k and my retirement accounts and said, hey, I'm going to go for it, right? You sort of have to roll the dice sometimes on yourself. So I felt comfortable enough for myself to be able to get ahead and say, hey, I can make this work, or at least I'm going to try. And the worst that can happen, I guess I can go back to getting a job again, right? That's what ends up happening. Either you have the means or you don't. Most people don't take the chance because they're afraid to lose what they have. But I felt comfortable enough that I had such a great reputation in the industry and enough connections through my years in the industry that I could just call certain people up, people that I've worked with, people that I've come up with that understood me, knew the kind of work that I did, knew how much knowledge I had and brought to the table, that I could say, hey, just give me a job, right? If I needed to, right? I got to pay bills. Just, I could do all of this from entry level job all the way up to making big decisions as a company, right? But if I need to just to kind of pay the bills, overhead, whatever, to eat, put food on the table, whatever you got, I'll do it. That's one thing that has never been beneath me, right? I'm always willing to say, hey, I know I'm capable. I can start wherever. You start me at the bottom. I don't care. You watch me go, right? So I
Mm.
always had that confidence in me because of the time that I spent in my years of experience. Uh, and the other aspect of my experience being in the military sort of gave me that confidence. Hey, if I can do that, I can do anything.
I love that. Let's pause right there. There's so many things. I was literally just taking some notes on topics I want to, touch on a little bit. Let's stay with the Marine Corps. First of all, really appreciate your service. It's
Thank you.
amazing. And the last guest I just had on the podcast also was in the Marine Corps.
Cool.
What type of impact and influence has that had on your life going forward? I feel like there's so many like amazing things that people learn from their time serving and being in the Marine Corps.
Yeah. So I think I'm part of a few masterminds. And you're probably a few masterminds too. And we find, or I found, the people that have prior military experience. I'm not saying it's the end all, but they tend to be the most successful in real estate, anyways.
Hmm.
And when I was in the corporate world, if I had an applicant that was former military or non-military, and let's say they had the same uh, resume,
Mm-hmm.
I would default to the military people. And
Mm.
the thing that the military teaches you is show up, show up on time, show up, and this is showing up is half the battle, right? Showing up on time, follow directions, right? No whining,
Mm.
right? Unfortunately, that's just the corporate world or the civilian world doesn't teach you that. No whining. Uh, Deal with the hand you've been dealt with, right?
Mm.
Do the best you can with that. Uh, Dealing with stress, working under pressure, right? And then the mindset aspect. And in this space or just in general, right? As we know nowadays, right? We know mindset is a big aspect of whatever we do, especially
Mm-hmm.
in entrepreneurship, in real estate investing, right? A lot of people believe that they can't do it, or that's why they don't take the step. I think the military teaches you have the right mindset, and for me, my own personal experience, that was my biggest takeaway. Being able to get through Marine boot camp. I came out
Mm.
of high school, and I still am. I was an introvert, right?
Mm-hmm.
And I am by nature an introvert, right? I become better at having the confidence to talk about what I know and what I do and so forth. Uh, but it gives you the confidence to once you're out, it's like, hey, if I was able to do that, if I was able to get through Marine boot camp, there's nothing in the civilian world that's going to be more challenging than that. And that was my approach when I came out and started applying for jobs in the corporate world. During interviews, people ask, well, how do you deal with stress? Because everybody deals with stress in corporate. I was like, look, there's nothing in the civilian world that's going to be comparable to everything that I experienced in the military. So whatever you
Mm.
throw at me, it's nothing. It's a joke. But that people don't bring that experience with them, right? So I think that's why former military people are successful in the entrepreneurship world and just kind of dealing with the stress and how to overcome, as we say in the Marine Corps, adjust, adapt, and overcome.
Mm. So good. And I could totally agree. I didn't have any background in that, but just the friends that I know that have been in the Marine Corps, I'm like, you guys are so disciplined, consistency, discipline. Like you just said, all those character traits, they're huge. I'm curious if you were talking to someone, coming out of high school, they didn't know what they wanted to do. Sure, there's a couple different paths. They got college, they got go work, maybe try to get into wholesaling, real estate, go door knocking. Would you actually suggest someone like go in the Marine Corps?
Yeah. So and let's set aside the Marine Corps. I'm just going to say in general the military services, right?
Yeah.
And the reason I say that is because I have two nephews, right? Two nephews that are actually in the Army National Guard,
Mm-hmm.
and we had these conversations, right? They know about my previous experience. Their dads, who happen to be my brother and my brother-in-law, right? They didn't have military experience, but they knew, and so we have these conversations because they were thinking about it. right? And the thing that I have to make it very clear to people is like, look, once you sign that contract, the government owns you. Okay, if you're
Right.
not going to be okay with that, then don't do it.
Mm-hmm.
But it's what you take away from the experience, right? You're going to build relationships with people that are going to be your lifetime brothers,
Mm.
right? And I go into different groups or different masterminds, or even just on social media in general, and I see somebody that's a former Marine. We don't even know each other,
Mm-hmm.
but we know we're brothers and we back each other up. And if we ran into somewhere and anywhere, it's like, hey, what years were you in? What was your what was your MOS, as we would say, right? What's your job occupation? What years were you in? It's like, let's have a beer or whatever your favorite drink is, right on,
Mm.
whatever, right? It's just that, right? Because we all kind of carry that, and we all kind of know what it took to be that, right? And the
Mm-hmm.
Marine Corps kind of stands out. And again, nothing against the other military services. My cousin's former Air Force, so I have family members and so forth, right? But the Marine Corps is a smaller branch of the military, and so that's why it tends to be so guarded and so close. But general military service, right? You kind of learn some discipline and how to conduct yourself, how to wear your uniform properly, and how to dress properly. Unfortunately, these days, kids are kind of doing their thing, whatever. Not to poop with that. I don't want to be the old man. That's right. But this is just some basic standards, right? Some
Right.
basic standards that unfortunately maybe parents don't teach, or you don't get that in high school.
Mm-hmm.
Teachers are too busy to trying to teach all that, and they're busy with their curriculum, whatever it may be. So those are things that maybe, as you're a little bit older, once you're out of high school, you can kind of take the opportunity to learn. You kind of get to see the real world, right? Not the fake world that you see in social media, but you get to experience some of that and uh, carry some of that knowledge with you, and just apply it in general.
So, for those who don't know, explain a little bit, just real briefly, how is the Marine Corps different than the Army or the Navy, that kind of thing?
Oh man. Well, like I said, it's one of the smallest military services, right? Marine Corps boot camp is longer than any of the other ones. And just to side, when I was in, if you graduated from, if you were a Marine or you graduated from the Marine boot camp, you could transfer to any other service without going through their boot camp.
Hmm.
If you come from the Air Force or any other boot camps and you want to be a Marine, you have to go through the Marine boot camp.
Got it.
So from that
And then,
challenge, that kind of gave us the understanding, okay, ours is the toughest. We can get through this. The other ones are not as tough. And, and there's plenty of Marines that change transfer services
mm-hmm.
uh, for different reasons, depending on, let's say, occupation, military occupation. Hey, I want to go fix, jets or boats or whatever. I want to learn this occupation. That isn't offered in the Marine Corps, because the Marine Corps it has a certain mission. Then maybe I transfer over and whatnot. And then just talking to like I said, my nephew's like, yeah, I got a couple of former Marines that are part of our National Guard. So they do their active duty, Marine active duty, get out, and then they join the whatever the state guard is, whether it could be Air Force Guard or National Guard. They carry their rank forward over, and but they don't have to go through boot camp. So I think that just seems to be a closer, and Marines tend to be a little cocky too, right? So I mean, it's just what it is, right? It's kind of like we feel we've earned it, we've suffered to earn it, so we're
Right.
gonna just wear out our sleeves. That's,
Right.
I mean, say it, but it is what it is. Right?
I love it. So, and then explain the benefit. Like, I think people know, but not everyone. You get a VA loan if you serve at all. Is that correct?
Yeah. So okay. So I am also, besides obviously we talked about being an investor, but I'm also a licensed RMLO, right? So I'm a
Okay.
mortgage broker, right?
Mm-hmm.
So I help VA or veterans get home financing too, right?
Mm-hmm.
So that is one of the benefits of being in the military, is if you've been on active, or if you are, or you've been on active duty, or you left the military service from active duty, and you received the other than non-honorable. So if you get discharged for dishonorable discharge, then you're not eligible, right?
Mm-hmm.
That happens, but very small amount of the population. But if you're eligible for a VA loan with your former prior military service or active military service, um, you're eligible for VA financing. Basically, the VA guarantees your loan up to 100% of the purchase price, right? So when they say they guarantee it, meaning is the VA says, hey, if you meet these guidelines to the lenders, if the applicant or the veteran meets these guidelines, then we will finance or we'll let you finance it. And if they default, we, the VA, will make you whole, right? That's what the VA guarantee is, right? The VA.
Mm-hmm.
That's how generally mortgages work, right? It's either HUD from an FHA or VA or USDA, or even on the conventional side, depending if it's LTV greater than 80%. There's a party that's guaranteeing the lender to be made whole.
And that's huge. That's huge. So essentially, breaking down in super simple terms, if someone's looking to, they have a VA loan, they can go to a house that's $500,000, get that house with no down payment. Correct. Do they have to do closing costs, or is that also included?
Yeah. So I mean, from a VA standpoint, you theoretically you could come in with absolutely zero money out of your pocket.
Uh-huh.
Now, when you're doing a VA loan, obviously it requires an appraisal. So it's good for you to have the money to at least pay for the appraisal to be done and the inspection to be done. But theoretically, you can recoup those costs back at closing. You can get that money back, right? So on VA loans, the seller can pay up to 4% of the loan amount towards your closing costs or prepays. So when we say closing costs, is lender costs or third-party costs like the escrow and title insurance and the recording fees that happen at the title companies or attorney. In addition to the prepays, which is setting up the escrow, right? The monthly taxes and the insurance that's required to be carried on a mortgage. Mm-hmm. Right. So theoretically, if that 4%, so in your example of 500,000, 4% is $20,000, right? So anything within that. Now you can't get that money in excess. So let's say your total closing cost is 10,000. Can you get that money in your pocket? No, you can't get that money in your pocket. It's up to. So the lesser, it'll cover up to 100%, but anything excessive of that, you cannot get. But so theoretically, if they're financing 100% of the loan plus the sellers contribute to your closing costs, then you could basically walk in with zero money down. And so one of the strategies that I teach, and we had this conversation about me coaching my nephews on this. Say, hey, we know about from an investor standpoint, the house hacking strategy. Right? It's like, how about you buy a fourplex, you find one, live in one unit, and rent out the three, right? Or a duplex or a triplex. Now, there are some qualifiers, right? You have to be able to afford the whole payment, and the contributions from the other units can be applied too, but depending on your income as either an active duty military, whatever your rank may be, or if you got out and now you got a corporate job or whatever it is, then that income has to be enough to support it, right? So it's not like you just get a house, you make $1 a year, and you say, okay, we'll finance 100%. You still have to be able to meet income criteria that you can make the payments. But VA is very flexible and lenient when it comes to veterans, right? Because they want veterans to have home ownership. They'll bend over backwards to try to make it work, right? To a certain extent. Right? But generally, they're going to be more lenient than any of the other program guidelines out there when it comes to owner-occupied.
Amazing opportunity. And you said one of my favorite words. So before we jump back in your story about how you started rent-to-own programs and went away from the mortgage, you said house hacking, man.
Yeah.
We got to talk a little bit about house hacking.
You know it, right? So, I mean, there's so many strategies that comes with that, right? One of the strategies that I tell people in this talk, right, there's a couple of groups, and I don't want to mention any group necessarily, but a couple of strategies is like, hey, you're a veteran, or you're in the military. We know military doesn't make a whole lot of money, right? But, okay, military doesn't get paid a whole lot relative to the corporate world. but use the benefits that you get to your advantage. One of them being is the house hacking. If you have the opportunity to buy where you're stationed, buy using your VA benefits. One of the strategies is just kind of like, hey, if you're going to have a military career, everywhere you go get stationed, go buy a house. If
Mm.
you're in one state, buy a house. Then when you get stationed over to somewhere else, buy another house and rent out the one that you leaving behind, right? And by the time
Mm-hmm.
you get out, you leapfrog this at 5 duty stations within the U.S. Obviously, if you leapfrog 5 years, then by the time you get out, you're going to have 5 rentals, right?
So good.
Where
So
can you? I
good.
mean, where else can you do that? Most people, most traditional buyers can't do that. I mean, there's a strategy for that too, right?
Mm-hmm.
But those people are going to need money. Now, from a VA standpoint, is you get a limited amount of entitlement. However, there's potentially you could use whatever you didn't use on your first one, you could use on your second one, right? There's some
Mm.
restrictions with that. Or theoretically, you could refinance the one that had the VA, right? Because you already bought it. Probably equity went up over a 2 year period, refinance it, get that VA entitlement back out, right? Refinance to a conventional or FHA, get that entitlement back out, and go do 100% financing on your next one again and again and again.
So good. And this is not even like, obviously VA, if you have a VA loan, you don't have to put up any money, but this works also for everyday people who just have a normal W-2. You still have to have the down payment, which, you know, probably anywhere from $20,000 to $25,000 typically. Primary, you know, owner occupied, what is it? 3 to 5%?
Yeah, so you could do 3 to 5% depending on, so there's a couple of conventional programs that will let you do as low as three, generally is 5%. There are some restrictions with that. It could be depending on your income, depending on location, right? So there are some possibilities. And even if you don't have the money, you got to bring something to the table, though, generally, right?
Mm-hmm.
So I know I have some down payment assistance programs, right? Some of them may have income limitations, meaning, hey, if you're a billionaire, you're not getting a down payment assistance program, right? You make too much money,
Mm-hmm.
right? So, which makes sense, right? The whole purpose is to help people that need the help, right? However, you have to bring something to the table. That some of those will have a general requirement of having okay to good credit, right? So it's not, hey, you get a free house with bad credit, you don't pay your bills on time, you don't have any income. Okay, here's a house. That's not how it works,
Mm-hmm.
right? You got to bring something to the table. So generally, I say, hey, the things that you bring to the table is money, credit, and income. You got to have at least two of the three,
Mm-hmm.
right? To kind of have to at least be in the ballpark, anyways, right?
Right.
So, yeah, so it can be done on even if you're not a veteran, it can be done. Yes.
And we can talk about like in a second, talk more about your program, but I just want to like let people know for me, and I want your take on this. I personally think that it's like the best if you're in your early 20s and if you're able to save up for the down payment or you have a VA loan, that's like the easiest way to build wealth
Well.
as early as possible.
Mm-hmm.
Not only are you going to be able to get rid of your living expense, because hopefully, and if you do it right, you buy the right house, you're going to have your entire mortgage paid for by the other people in the house.
Yeah.
And then in my case, I was actually able to make a couple $1,000s while living in that house. So, like, guys, if you there's a couple different strategies. Dominic mentioned one. What I did was buy a 6 bedroom house, lived in one of the rooms, rented out every other room. Another strategy, which you mentioned, get a duplex, triplex. So buy one unit, or actually live in one unit, and you have your own privacy. Because I know a lot of people's like, Jesse, I can never live with other people. Cool. I think you still can because it's worth the investment and sacrifice. But let's say maybe you're a couple and you have a kid. Okay, I get it. You live in one unit and then you rent out the other units that you also own as well. So a lot of different ways to play this game. I still huge believer, you know, I shot it from the rooftop that house hacking is like the best way to get in, probably the easiest. You have anything that you want to add to that?
Yeah. I mean, house hacking is the most basic strategy to build wealth, right? So, um, let's talk about veterans and non-veterans, right? So veterans, we're used to living in the barracks with other people, right? So it
Yeah.
shouldn't be a problem sharing a house with a bunch of other guys. Two, you've been in college and you're in the dorm, you're sharing a room, right?
Yes.
And then even when you get out of college and maybe you got your first job and you got a couple of buddies, hey, let's rent an apartment, let's rent a house, we're gonna live together, right?
Mm-hmm.
What's the big deal? Everybody's done it. I've done it. You've done it. I mean, everybody sort of
Yes.
starts that way. So while you're young, you have the opportunity to do so. And as you said, your housing is your biggest expense each month.
Yes.
What if you can cut it in half or a third and
Mm.
use that additional money, not to go blow it, go party and go do whatever, right? But to accumulate more money or invest. If you want to invest, do traditional mutual funds or stocks or whatnot. We choose to do real estate, right? Because we
Mm-hmm.
understand it. Uh, but you can accumulate wealth. If you have debt, helps you pay and get out of debt so you can qualify for more house. Getting out of debt helps your credit score. You get better
Mm-hmm.
terms when you have better credit score from financing, and you have more opportunities to accumulate that wealth to build your next property, your next property, your next property. And I know the strategy that you use, right? The co-living strategy. It's a fast way to kind of accumulate that wealth. Not only are you collecting money from people that are living with you, right? Even if they were just roommates, right? And
Mm-hmm.
then lowers your overhead and allows you the opportunity to invest, whether it's traditional investing or real estate, buying your next property, using all the benefits of real estate that helps us as real estate investors, right? Depreciation, expensing all your taxes, insurance, and whatnot. Um, so yeah, house hacking is like the easiest thing you can do and the most foundational piece to building wealth over time.
You
Absolutely.
heard it. We got a cosign, another cosign on house hacking. I love it.
Yeah.
So let's jump back into your story. You were working the W 2 and then you jumped out. You said you doubled down, you bet on yourself. So our audience is in that position for the most part. We have kind of two audiences. One, they're working the W 2 and they want to get out. They want that financial independence, location independence, and be able to, not rely just on one source of income with their job. And then we have another, group of people within our community that are going from 6 to 7 figures and beyond. So speak to that mindset that you had that made you have the confidence to say, you know what? I understand this stuff and I'm ready to bet on myself and go all in and then continue that story.
Yeah, absolutely. So when people ask me, it's like, okay, I want to invest, right? When I talk to new investors, I said, okay, you want to invest? There's two ways you can invest: actively or passively,
Mm-hmm.
right? Actively is you got to go source deal. You're going to swing the hammer if you're going to go flip. You're going to pick up the phone and start dialing people if you're going to cold call. You got to go out to houses and go see houses and walk through houses, and hoarder houses and all that, right? If you're going to do wholesaling, right? You got to do Airbnb. Okay, you got to deal with people that are like, hey, the leaky thing, or I'm missing this or I'm missing that, right? You're going to do Airbnb, whatever. Or you're going to be a
Mm-hmm.
traditional tenant, landlord. Then you're going to get the faucet is not working or whatever, right? Or you can do it passively. Now, most people, if you're already have a W-2 job and you don't have the time, get around somebody that's experienced like yourself or myself and can bring the opportunities to you,
Mm-hmm.
because you don't have the time, or you don't want to make the time to go find the deals. Get
Mm-hmm.
around people that have the deals, that are doing this every day, that understand the numbers, can explain to you, and you can invest passively and say, hey, I got a deal for you. This is what the numbers here. I'm just going to assign it to you, or I'm going to hand it over. This is the number. You're going to take it over. You're going to pay me whatever we agree on. Or, hey, I got this property. This is going to cash flow as this. You want to be a partner. You want to be the investor. You want to own it and manage it, or you want to be hands off and let me manage it, and we're going to do it as a partnership,
Mm-hmm.
right? So if you have a W-2 job, you have to make that decision. Two, if you have the means to leave your job, I'm not going to tell anybody to leave their job. That was just my own personal experience. I felt confident enough. But if you have a W-2 job, what I would say is save, give yourself a runway before you're going to
Mm-hmm.
leave your job. Give yourself a
Yes.
runway. What are you going to be comfortable with, right? 6 months, 12 months, right? All this, I say you can do anything if you, with planning and execution, right?
Mm.
Plan it, execute it, stick to the plan, and do it, right? So you can. So I'm not going to say, hey, just tomorrow, I just quit my job and that's it and that's done, right? you know,
Mm-hmm.
there's some stuff that you got to do to get prepared, right? Because and it could take you a little bit to get going, depending on what you want to do. Then the next part to that is active or passive. The next is, what is it that you want to do, right? You want to flip houses, you want to wholesale, you want to run Airbnbs, you want to do co-living facilities, you want to learn creative finance. What is it that you want to do? Do multifamily, whatever it is, right? Pick something. I tell people, pick something that plays to your personality. Because if you hate being on the phone, you got no business cold calling. Because you're not going to do it, right? You're not. And some of these things you may end up finding out along this journey, because it's a journey, right? You're going to find out what you're good at and what you do or don't like doing, which is the same thing that I found out.
Yeah,
right?
I want to jump in real quick. What you just said is pick something, but what I always suggest, and I want your take on it, pick something after you try a couple different things. You don't have to just jump right in.
Sure.
So while you're working your W-2, try a bunch, try Airbnb, go meet with people, join a mastermind for this. And then like you just said, play to your strengths.
Yep.
Great. That's a mic drop right there.
Yep.
So true. So try a bunch of things, but then once you pick something, then stay there. Because I think also people have a tendency of, it's not working. I spent 6 months trying this. Like, hopefully you already built the skill set while you're at your job. You have a cushion, which I want to ask you, what were you comfortable with? For me, I needed to replace my sales salary for me to feel comfortable to make that jump. For me, that was 6 figures. I didn't make that before I was like, all right, Jesse, I have a backup plan. Not even a backup plan, but I just have security. Because for me, like trying to do stuff from a lack and survival, I'm not good at that. So I needed a little bit of stability, security before I was able to jump all into entrepreneurship. What was your, process and method?
Yeah, so before I made that decision, I had already sort of been planning, because I could sort of see the stuff that was coming down the pike with the corporate stuff and the merger and so forth, right? So it's just part of the experience. You kind of see some of these things coming as you've been in the corporate world long enough.
Mm-hmm.
So I sort of started planning already, and I had a few traditional rentals too as as a side thing as well at that time. And then so I gave myself 6 months, and if it didn't work, then what I could do theoretically is sell my rentals and have more money that I had built up equity in those, right? Those are like my plan B, plan C, plan D, right? So I gave myself 6 months to go ahead and kind of take that plunge. But I had been working towards that anyways, right? And so I had other than my home, that was the only debt that I had at the time when I made that plunge, right? So again, you got debt, pay it off, and then kind of be ready, right? Yeah, so that was my decision. I felt comfortable enough to go ahead and take the plunge. And then I did it. And going back to figuring out what your genius zone is, right? I tell what's your genius zone. So at that time when I left, I thought I wanted to go flip, right? And I got the flipping bug. It's like, oh yeah, let me go do some flipping. But I figured out the hard way that, hey, managing projects, managing subcontractors, running budgets, basically being dependent on a third party who has a different agenda than you do. Contractors have a different agenda than we do as flippers, if you're a flipper, because they're managing projects. Generally, contractors are good at the trades, but they're not good business people, right? So what they're doing is they're taking your money to finish the last project and taking the money from the next project to finish yours, because they're not good money managers. Yeah. Otherwise, they'd be their own flippers. They'd be business owners, right? And they're good at the trades, and that's okay, right? And it's a hard skill set to be a good business person. They don't teach you that. Even if you got an MBA, they don't teach you what real world managing or running a business is, right? So marketing, sales, all this, the bookkeeping, budgets, right? Projections, all of that. They don't teach you that. No. Right? Anyway, so generally contractors are not good business people. They're good at the trade. And so that was the challenge for me that I could see is like, oh, this stuff is beyond my control, because they got a different agenda. My money clock, my hard money clock is running. It's expensive. I'm going to either if I go over budget, that's going to cut into my profit, if I go over my timeline, that's going to cut into my profit because I calculated so much, so much carrying cost. And then the challenge of that is I'm guessing at the end. I am guessing what the market is going to be. And look at all the people that have found that out the hard way over the last couple of years, right? Right? They bought it when the rates were at 5. By the time their project is done, the rates are at 7. Now the market is totally changed. Whole different world, right?
Yes.
So you're guessing. With my rent-to-own strategy, I know exactly what my exit is going to be because I already have a buyer in place.
So good. Okay. I can't believe it's already been 35 minutes. Let's dive in to what you do and how you can help people who are listening. And then also just on the investor side, how you came up with this concept or where you heard about it and then decided this is my route that I want to go.
Yeah. So the stuff that's happened to people over the last couple of years, I experienced that myself back in 2018. For those of you that may or may not know or remember that were in the industry, right? Fourth quarter of 2018, the Fed started announcing that they were going to stop QE, right? Quantitative easing, for those who don't understand. So that has an impact on rates. What's that?
What does that mean, QE?
Quantitative easing.
Okay. And that affected rates, you said?
So it's a monetary policy.
Got it.
Quantitative easing is they're flooding the market with money, right? And what that does is it keeps interest rates low. Fourth quarter of 2018, they say we're stopping. We're going to stop buying bonds. So that means interest rates started going up in fourth quarter. For those of you that were in real estate, either agents or lenders, and maybe some people, some flippers too, interest rates started going up. Now thinking back, I mean, interest rates got up to like maybe 5.5, 5.75 at the time, right? We had been at 4. So it just, fourth quarter of 2018, the market was like dead. How it was, I don't know, fourth quarter of 2021. Okay. So I had a couple of flips and I ran into the same situation. It's like, this thing ain't moving. This thing ain't moving, get no activity. I got to do something. I got a hard money loan that's charging me, 13%, 14%, right? I got to do something. It's eating my profits. And then if I don't get this sold, right, I'm going to lose money. So we put that property up for sale, a traditional listing with an agent. Obviously, when you list the property with an agent, they're going to get their commission for listing it. And also the buyer's agent is going to collect commission. Plus, you got to pay closing costs, and you may even have to do seller contributions, like we talked about. Hey, the buyer can't, they need a 2-1 buyout. Can you help them with their closing costs or what? So that cuts into your profits, right? That's what happens now. That's the general thing right now, right? So people are having to pay closing costs for the buyer for them to buy down their interest rate. Anyway, so at the time, we had no activity. So basically, what I did is like, I got to do something. But I had heard of rent to own. I had not dove deep into it, right? I had not dove deep into it. So I started digging through it and kind of learned a few things. And generally, the method that's taught out there on creative financing or sub 2 or any of that, right? At least options and whatnot, is go direct to seller. See if the seller is willing to do some kind of terms for you. Once you get the property under contract, then you're going to find an end buyer. So you're getting it at one term on one end from the seller, and you're selling it for more on the other end to a buyer that can't qualify traditionally, right? Well, in this instance, I was the seller.
Right.
I was the seller that can't sell. But obviously, I didn't do that to myself. I just say, hey, why don't I just apply the stuff that, right? I'm the seller. What I need to do is I refinance out of that hard money loan. I got into a long-term rental loan, right? This was before DSCR was a DSCR thing that you know about. Debt service coverage ratio loans for rental properties. So I refinanced it to a long-term rental loan, 30 years, right? So I knew my payment was fixed and I didn't have that 12-month clock on the hard money because hard monies are 12-month balloons. They're due at 12 months, right? They have to be paid at 12 months or you got to pay points or potentially the hard money lender can come after the property. Right? So I transitioned out, refinanced, pulled a little bit of money out to kind of get me through a couple of months on that particular project. Then I put a sign out and I put it on Craigslist. Put a sign that says rent to own no banks require, bad credit, okay.
That was your marketing right there.
That's it. And a ton, and you can imagine the number of calls, right? Because the
Yeah.
reality is, right, as a mortgage lender, I understand this, is 80% of the people out there that want to buy a home don't qualify for traditional finance. They need help,
Correct. Yeah.
right? So basically, I did rent to own on my own property, got a buyer that paid me more than what I was selling the property for on the MLS. I didn't have to pay an agent because it's a private party transaction, right? A to B, me and that private buyer. They gave me a down payment until they can get their credit or their financing in line, right? So that turned a potentially losing deal into a profitable deal by almost 50K.
Wow, that's amazing. And let's just real quickly dive into how you're helping those people. So there's someone, even like, for example, let's just use my case. I had a great W-2 and then I don't have it anymore. So
Yeah,
I'm not bankable, right? So I can't really get a traditional loan. And this is a lot of people are in this position. I'm
absolutely,
sure
right?
there's other people in different positions, but let's just talk about this one.
Sure. Yes.
So
Yeah.
yeah, go ahead.
So the goal is to get you to traditional financing. All I'm doing is being a bridge towards that goal. Now, because
Mm-hmm.
I am a lender, I know the guidelines. I know what's keeping you from getting financing. Because if I could
Mm-hmm.
get, if you could qualify for financing, I just get it for you, right? So my applicants that are looking for traditional financing, if they qualify for traditional financing, they just get their loan, go buy the house, and they go on their merry way. But if they can't get financing as part of my vetting process, as part of the applying just like a traditional loan, I know exactly what's happening with them, whether it's they're unable to document their income, or they have income but they write off a lot of business owners, right? CPAs say, hey, no, no, you make this money, but write off as much as you can so you can pay the least amount of taxes. And generally, everybody wants to pay the least amount of taxes. But the problem is when you go to get financing, the banks don't see it that way. The banks qualify you on your net, not on your gross, right? So to them,
Mm-hmm.
you're broke on paper. You're unbankable, as you said, right?
Mm-hmm.
You're unbankable. So you can't get financing. Most of the time, people that are self-employed don't find this out until they're ready to go buy. So now what do? I got to extend my rental lease term on my apartment or my house or whatever it is. And if you're an agent and you have a client like that, sometimes you don't know that. And maybe you're under escrow. There's earnest money at risk. And now the deal is just falling apart on you, right? So what we do is we can step in as the buyer, right? We can step in as the buyer and do an agreement with the person that can't qualify. They make payments to us until they can't qualify, and then they just buy me out down the road, depending on their situation. So we make it customized to their situation. It can be 1 year, 18 months, 24 months, whatever it may be, right? I know when looking at their situation, how long is it going to take for them to get uh, uh, bankable, basically,
Mm-hmm.
right? And so we structure the deals that way, and we help them get that property now, because that property is going to be gone when they're ready. Two,
Mm-hmm.
they may be chasing the property values up, right? We want to lock it in. So that same $400,000 house today, if they're ready in 3 years or 2 years, that house is gone too. In that same neighborhood, that house isn't worth. I mean, it's in selling for 400, selling for 450 or 500. Now you're chasing and chasing and chasing.
Mm. Give me an example of a recent, couple, family that you, or even single person that you helped with this strategy.
Yeah, absolutely, right. So basically, self-employed is probably 60 to 70% of our people. The other
Mm-hmm.
ones are the ones that have life events, right? So I'll give you an example. A gentleman who had his own business,
Mm-hmm.
uh, he had a construction company, gross over $1 million. But as you know, us as entrepreneurs, we just don't have one business. When we have one business, we do multiple businesses, right?
Yeah.
We can't help ourselves, right? Can't help. Well, this gentleman partnered up with another individual to run a restaurant. Like, do construction, restaurant business is a whole different, but whatever, right? We're just crazy like that. Entrepreneurs are just
Mm-hmm.
crazy. However, the problem with that is the partner started embezzling money, right? So the creditors now are going after him. One business is making great money, it's just fine. This one is in trouble because of the partnership embezzling money. So when he goes to the attorney says, hey, you got to file bankruptcy. So that stops the collections and that stops the collectors on it. Well, the ruiner's credit shows up a bankruptcy in his credit. He makes good money on his other business. He had good credit. He has money to put down, right? So, but he can't get traditional financing. So what we did is, hey, we'll step in as the buyer. We're going to do a rent-to-own agreement with you. You're going to make this payment. Once the foreclosure seasons, the bankruptcy seasons, then you'll be eligible again, right? So everything as it relates to credit just requires some seasoning, meaning the older it gets, the less impact it has on your score, right? So a collection today has a bigger impact than a collection from 5 years ago, right? So it helps you the older it gets. So eventually over time, your credit score will go up the older those derogatory items get. And now you're eligible again. And now you qualify for financing. And now you just buy me out. And because I don't want the house, right? I'm not in business to collect houses. I don't have an inventory, right? So with our program, what's unique about our program, unlike other programs, is we let you pick the house you want. Right? There's other creative finance. Hey, we have a bunch of houses over here. Pick one of my 3, and that's all you got. Right? Well, my program is not. My program is pick one on the MLS. So we buy on market. I don't have to do off market necessarily. Right? Right? We don't do ugly houses. Buy pretty houses, stuff that's on the MLS, move-in ready. It has to pass inspection. It has to get an appraisal. Right? So it's almost traditional financing, basically traditional. It's almost a traditional process. Right? So it's perfect for me as an investor because I don't have to fix, right? So that's why I call it, getting the profits of a flip, the cash flow of a rental without the landlord headaches, because they're responsible for taking care of all the maintenance and repairs themselves, right? So they call me, don't call me. Would you call Chase if the faucet was leaking? No. You got to fix it.
This is your house. You fix it.
That's right. You want to be a homeowner. This is the responsibility of homeownership.
Welcome to homeownership.
You got to maintain the lawn. You got to clean the pool. You got to pay for the electricity and the water, right? This is all part of that. Now, there's a few things that we do to kind of help in that process, right? So we'll do 1 year. We'll buy a 1 year warranty, home warranty. It's like, call the home warranty company, right? So we'll throw in a 1 year home warranty. They need to pass that. Hey, you pay it on your own, right? So that covers that. And that's some of the things that people do in the traditional aspect of it. So, hey, low maintenance for me. You're taken care of, right? You're being a homeowner. You act like a homeowner. You're responsible. And we make it very clear. These are your responsibilities. If this isn't a fit for you, it's okay. Then you're not just, then you're not ready to be a homeowner. You should be a renter. Right? It's not for everyone.
I want people to connect with you, and people might be like, Jesse, you have rentals, so why would you want someone to, go do rent to own and have their own properties? Guys, I am in this to help people grow and elevate in life. I love having amazing people live in my houses, but there's a season of their life where they're going to be like, I want to have my own house. I want to help people do that. I want to help people go get their own homes. That's changed my life. I wanted to change your life as well. So everyone who's living in our community, my goal is to stay in the community, stay around amazing people who are like-minded, you want to grow together. But once you do want to buy a house, we want to supply resources, people like Dominic, to help you with that process. That process, for me, for the first time, was scary. I didn't know what the heck I was doing. And also, people don't start early enough, like you just mentioned. They wait till the last minute, find out they're not qualified. Oh, shoot. Okay, now it's another 2 years. Home prices have gone up. You could have got it if you knew the creative ways to do it, it's like, sub-2, creative finance, something with Dominic. So we want to be that resource to help people once they're ready to go get their own place. We're here for you. So Dominic, let people know how they can connect with you. And also I want a verbal while we're on the video chat that you want to come speak to our community and, plug in with the Growth House.
Yeah, absolutely. Right. As it relates to your community, let me address that. Right. So you have a strategy, but we've talked about this, right? We have overlapping synergies here, right? Because somebody could be at a point in their life, well, hey, I just need a room because I just got a new job. I just got out of college. I just got out of the military, and I just need a roof over my head, get my feet, get my feet on the ground, get settled in, start my career, whatever it is I'm going to do and figure it out, right? And I need low overhead, right? So
Mm-hmm.
so I would send them to you and say, hey, get started. Now once you're settled, now let's start helping you and say, hey, how do I become the Jesse in this transaction? Or how do I just, hey, I just want to buy a house because I got a family and I got married and I got kids now that I got out of the military or got my career, whatnot, but I don't qualify, right?
Mm-hmm.
Or no, the other path is how about we blend the two? How about if you don't need the whole house for yourself? Hey, we can help you get the house, and now you apply Jesse's strategy to either co-living or renting out or house hacking, as we talked about, and that helps you
Mm-hmm.
grow, helps build your financial situation, helps you invest in more deals to eventually say, hey, maybe after 5, 10 years, I don't need this W-2 job anymore because now I have other sources of passive income.
Absolutely.
Right?
Guys, like every single time I walk into one of our houses, someone in the house is like, Jesse, like, especially if they just moved in, they're kind of seeing the concept like, it's an amazing place to live. I love this. But also, I realize you're able to make money off of this. This is really cool. I want to do this one day.
Yep.
We're not holding back secrets. We want you guys to have all the resources. And so I love that this conversation is going to definitely be replayed. I feel like we could talk for another hour. I wish I had the time. So I think part 2 is necessary. But let people know how they can find you. What's the best way to reach out to you?
Yeah, so you can call me or text me. My phone number is 602-644-1606. Or you could find me on Instagram or Facebook. Instagram at Mr. Rento Owned Homes. Pretty easy, right? I'm also on YouTube. My channel is called Mr. Rento Owned Homes. Pretty easy, right? Or you could email me at my business email, Dominic, just like my first name, Domenic at Danino, like my last name, Danino capital.com.
And again, appreciate your time, man. We're going to connect. Let's set up this time to come speak to our community.
Yeah,
This is
absolutely.
Jesse Ray with the Growth House Podcast. We're out.
All right. Take care.